Discover the ultimate trading strategy for capturing market reversals and unlocking insane profits in just minutes. In this video, we unveil the perfect indicators designed to pinpoint key turning points with precision and efficiency. So let's dive in. So I'm in Tradingview, and this is what our chart is going to look like when we are done setting up our indicators. I will be using a 3-minute time frame and on a Bitcoin chart to explain this strategy. I'll quickly cross out these indicators so I can explain their settings from the beginning. First of all, let's add our first and main indicator to the chart. So let's head over to the Indicator Search tab and search for the RSI indicator. After that, select the indicator made by J. Rogers and add it to the chart. This Heiken Ashi indicator is one of the best indicators to use. When scalping, this powerful indicator provides you with a clear view of the market, trend direction, trend reversals, and also give entry and exit signals using overbought and oversold zones. Now, let's head over to the Indicator Settings tab. There are many settings that can be changed. The first of which is the length of the indicator. You can increase or decrease this depending on the length which you want to give the RSI indicator. As you can see, by increasing this value, the indicator becomes less sensitive and less precise. However, if we decrease the value of the indicator, it becomes a lot more sensitive to the price movements. Since we will be showcasing the indicator on a lower time frame, we will change the value to 10. The next setting is the open smoothing. By increasing the value of the open smoothing, it increases the bias towards the prior open value, helping provide better visualizations for the strength of the trend. Because of this, let's change the smoothing value to 5. If we scroll further, we can see that there is also a setting for changing the length of the RSI plot. You can also add a stochastic RSI to the indicator, however we won't be using it, so we will be keeping these settings at default. Now that we have changed the input settings, we will be changing the style settings. Here we will first be removing the RSI histogram overlay and shadow. After that, we will be removing all of the components of the stochastic indicator. So after this is done, this was all that we needed to do. If you don't feel like analyzing prices yourself, you can join my free Telegram group. Here I share daily the buy and sell positions I open. The link is in the description below this video. This indicator has 3 components. The first component of the indicator is the RSI Heiken Ashi candlesticks. These candlesticks display a modified version of price action, smoothing out the noise and making it easier to identify trends and reversals. The second component are the overbought and oversold zones. These are the green and red zones that are plotted at the 20 level and the -20 level. Whenever the candlesticks reach these zones, we consider the market overbought or oversold. Now, the final component is the center line. The center line is set at a value of 0. This line represents the equilibrium or middle point between bullish and bearish momentum. So when the oscillator crosses above the center line, it indicates that bullish momentum is gaining strength and may suggest a potential uptrend. And whenever the oscillator crosses below the center line, it suggests that bearish momentum is increasing, indicating a potential downtrend. Now, let's see how the indicator can be read. The easiest and most straightforward way of reading the indicator involves looking for oversold or overbought signals. Whenever the candlesticks on the oscillator reach the overbought zone, it indicates that a bearish trend reversal might start. On the other hand, whenever the candlesticks on the oscillator reach the oversold zone, it indicates that a bullish trend reversal might start to play out. This is the most straightforward way of reading the indicator. However, there is another method that you can use to read this indicator. This involves looking for differences between the price action and the indicator. Here, we can see an example of this. The price was making higher highs, while the Heiken Ashi candlesticks were making lower highs. This shows us that a sell divergence is playing out, making it likely that a trend reversal to the downside may occur. If we take a look at the price action after the move was made, we can see that this indeed was the case. And similarly, if the price is making lower lows and RSI oscillator candlesticks are making higher lows, this makes it likely for a reversal towards to the upside. Now that we know how to use this indicator, let's add a few extra indicators to the chart. The first indicator we will be adding to the chart is the EMA. Add this indicator to the chart. The next indicator we will be adding is the volume indicator. So we will search for the volume indicator. After that, select the volume indicator made by Tradingview and add it to the chart. Now let's change the indicator settings. we will navigate to the EMA indicator settings and click on the input tape. Now change the value of the EMA to 200. Next, click on the Style tab, and here we will be changing the color of the indicator to make it more visible. You can change it according to your comfort. Now let's head over to the volume indicator settings. Once you have done that, head over to the Style settings and enable the moving average in order to make the line easier to see. We will also be changing the color to yellow. That was all that we needed to do. First, we will be using the 200 period EMA to determine the trend of the market, based on if the price is trading above or below the EMA. Next, we will be using the Heiken Ashi RSI oscillator to find the exact point to enter into a position. And finally, we will be using the volume indicator to determine if there's enough volume in the market to enter into the position. Now that our chart is set, let's go through the rules for entering a trade using these indicators. So, for a buy trade to be valid, first of all, the price must be in an uptrend. We know this because we can see that the price is trading above the 200 period EMA. However, we can also see that the price just made a pullback to the EMA after which a buy candle was printed, which is a buy signal. If we look at the Heiken Ashi RSI oscillator, we can also see that it was indicating that the market was oversold along with this. We can see that the candlesticks have now left the oversold zone and turned green, indicating that the price is starting to head in the upward direction again. Finally, we can see that the bar on the volume oscillator surpasses the 30 period moving average, showing us that there is enough buy volume in the market to push the price further in the upwards direction. So if these conditions are fulfilled, we can enter into the buy position. So I'll open a buy position here. We will be placing the stop loss at the recent swing low. And for the take profit target, we will be targeting a 2 times risk to reward ratio. Now let's see how the trade plays out. You can also enter into trades without using the EMA by using the second method I explained earlier in the video. Now let's go through an example of a sell position through this strategy. If you don't feel like analyzing prices yourself, you can join my free Telegram group. Here I share daily the buy and sell positions I open. The link is in the description below this video. First of all, we want a downward price trend, as the price remains below the 200 period EMA. However, a recent pullback to the EMA occurred, followed by the formation of a sell candle, which further strengthens the sell signal. So just like we did in the buy example, for confirmation of this sell signal, we will analyze the Heiken Ashi RSI oscillator for sell trade, and it should show an extremely overbought market condition. Simultaneously, we can see the green candlesticks turned red right after leaving the overbought zone, signaling a potential downward movement in price. Finally, we can see a red volume bar was also recorded, surpassing the 30 period moving average on the volume oscillator. This implies that there is sufficient bearish volume present in the market. So if these conditions are fulfilled, it is advisable to enter a sell position at this point. After the position is opened, to manage risk, we will set the stop loss at the recent swing high. And for the take profit level, we will aim for a 2-to-1 risk to reward ratio. Now let's closely monitor the trade's progress and observe how it plays out. So this is going to be the end of this video. If you have enjoyed it, make sure to press the like button, subscribe to my channel, and hit the bell. Thanks for watching the video till the end. I'll see you guys in the next video.